Welcome to the podcast. I'm here with two of our top producers from last year, Alex Inda, top producer, and Austin West, second place. But you also get, you get some. You guys are neck and neck a lot.
Yes, we were.
But good year, 2019.
Great year.
Yeah,
A lot happened.
it did. It did. A lot of stuff happened. And you guys aren't. What's crazy is you guys aren't like crazy seasoned AEs. Like you haven't been in this business like. During the crash, you guys were probably still in high school, maybe 10 years ago, 12 years ago? Or like just out of high school?
I was graduating in 2007.
Wow. Wow. What about you?
Yeah, same. Graduated in 2007, went to college.
Yeah. So this is the first mortgage job you guys have had.
Yeah.
Yeah.
Other than, you worked at Chase and.
Yeah. Never touched a loan though.
Right.
I worked retail side. So I didn't even, people ask me questions about a mortgage. I'm like, dude, I have no idea. Go talk to my loan officer in the back.
Yeah. So we put you guys through the fire. Like it was like mortgage 101 by just fire.
It's one way of putting it.
Like you ain't going to make any money unless you get these loans done.
Yeah.
Right?
Yeah.
And I don't think you realize that until like you're in it. You're like, oh shit, I'm really not going to make any money until I get these loans done. You're like, okay.
Yeah.
Everything sounds great on paper. And then you're 3 months in like, oh, this is a lot harder than everyone made it seem like it was.
But then, you get a couple of these jumbos and next thing you know, you're doing like 5 to 6 million. And then you don't worry about the dollar amount anymore. It's more about fundings and how do I get to 10 million? How do I get to 15 million? Things like that. But that's what makes it exciting.
So that is exciting because I see your paychecks. So I know that's been exciting. What do you think separates you guys from your average AE? Because, doing 100 million last year and you were at what, 60, 70,
85.
85.
Yeah.
What, where's the report? No.
Yeah.
So that's very incredibly great for, especially for, just for any AE, but especially for a new AE. But I see how much you guys work, how much time you put in. And so talk to me about your work ethic and kind of what you think separates you from other account executives or even just anyone in the business. Like to start with you, Alex.
I think the big thing is, especially since maybe we might not know everything in the beginning, the work ethic in terms of the ability to, I think the biggest thing is when you have an issue on a file, the ability to show the broker that you realize the issue, you know possible solutions, you lay it out for the broker, say, hey, we have A, B, C, D. I've thought about it already. I've spoken to the team. This is what I think we could do to get it back on track if it falls off the track.
Offering
I think
solutions and
I think that's the quickest way to solidify a relationship.
Right.
Is how to make a loan go to the finish line when you have an issue. Everybody could do 50 LTV, a million in assets, putting $250K down on a $500,000 loan.
Sure.
It's the nitty gritty that will maintain your relationship, especially for, repeat brokers and repeat customers.
Right.
So I think that's my biggest thing is.
It's almost like you're a member of the team with the broker. Like the broker, you're not just like the guy over at the lender, but you're a team member with that broker to get his deal done. And it's now partly your deal, our deal. At the same time, we're all a team trying to get it done. So you're offering solutions when, some AEs would just be like, oh, sorry, man, your deal just went sideways. I don't know what to tell you. But you guys are offering solutions and trying to get that deal done, which means a lot. Like from originator's perspective, when you have someone on the other end that's talking to you like a team member, you want to come back and bring your deals, not even just your hard deal, just any deal, because it's just like, it feels right, Right. What about you, Austin?
Something that always sticks in my mind is Dave talks about all the time, right? Dave was one of the top 5 AEs for the largest subprime lender for a decade straight. So that guy's been around. I think at their peak, he said they had something like 1,000 AEs there.
Yeah.
So, and something he always says that we do differently that is brokers aren't accustomed to, even he didn't see back in the day, is we are kind of that new age AE, right? Whenever we go to these shows, you look around and the average AE at other companies in their 40s, 50s, sometimes 60s, right? So these guys have been doing it for 5, forever, 10, 15, 20 years. And part of that is the thought process behind how you are supposed to be an AE is a bit antiquated.
Yeah.
And something
it's
I
so
think
different today than it was then. Yeah.
Today, something I believe that we truly do differently than most AEs today or prior AEs is we're technicians.
Yep.
Like you said, we're so involved in understanding every single aspect of the loan now
Right.
that when something comes off track, they do have that trust in us
Yep.
that he's saying that we've been able to build now. The AE's like, oh, okay, that can. I'm not really worried. Austin or Alex got this, right? So it's
Yep.
having the ability to look at things differently, change with the industry. People like to call this subprime, but it's so different. But there's
So
also
different.
been nothing like this out there ever.
Right.
So if you're an AE that's been doing this 20 years, just because you have a big book of business and you understood what it takes to be an AE successful 10, 20 years ago, that's not going to work today.
Right. Right.
You have to just have a different approach. And I think that's where we're a little bit blessed that we came into this knowing absolutely
Right.
nothing.
Yeah. You
right?
didn't have any old habits you had to drop,
None.
you know? Yeah.
Just a couple of guys who've been successful in sales and other prior jobs that gave this kind of a fresh look. And then that's why we've had successful AEs even under us, right? Is because we're giving them a different perspective. And we have had a lot of your guys come through that have been 10, 20-year AEs that it just didn't work. So in a new type of lending, you need a new type of approach. And I think the way we approach it is we're like, yeah, we're AEs and here's what I'm supposed to do. But I want to know what my AM does. I want to know why an underwriter thinks this way. I want to know what are the issues that you've had trying to sell the loan that maybe I need to look out for. Right. So it's understanding every aspect of it is what has made us successful compared to just, I'm an AE, here's my box, here's what I do. And at the end of the day, it doesn't work the same.
Right. And you're not just the guy that's call, bugging people, but you have solutions. You've got products, different things. So let's talk about brokers, because that's who's listening. That's who's watching us. Brokers, most every broker that I know would love to do a $2 million loan, would love to do a $3, $4, $6 million loan. They just don't always fall in their laps. Sometimes they don't even know how to go get them. Because they've just known, their Fannie Freddie, or they've known their FHA, VA Govy, whatever. Maybe they're a VA specialist, but they're starting to see like, oh gosh, my book's starting to, I can only churn it so many times. I can only refi these people so many times. I've got my realtor base who's sending me purchases, but I'd love to tap into some of these bigger loans and these more non-QM interesting deals. What do you think? Because I know you guys have top brokers. So you have brokers that send you business every month, every scenarios every week, maybe even every day. What do you think separates your average broker from your top brokers? Like, what do you think they're doing differently to get some loans that would fit, these big jumbo deals, kind of what we do?
Yeah, I think the common thing for my top brokers is you kind of hear the repeat scenario, like, hey, I got this client from a financial advisor. I got this client from my close CPA friend. I've done a loan for one of his past clients, so now I'm getting his, other self-employed borrowers.
Right.
I know we've said that before in the past, but the best brokers I have still get their clients from financial advisors, from CPAs. Even I'll tell you a story. Even my own, financial advisor this morning emailed me a scenario about one of her clients wanting to buy a $1.1 million home in Maine. And she knows what I do. So, the more you get out there that you could do certain things, you'll start to reach out to more of these kind of clients. And my financial advisor, who has this database, or, her borrowers are, making well over $1 million a year. And I think that is still the gold mine of clients, current clients and future clients.
To that point, I think, as a mortgage broker right now is like, it's not like 05 in a sense, but mortgage people are making a lot of money. They're crushing it right now. In 2020, looks like it's going to be the same, if not way better still. So
we can hope.
Yeah, we can hope, right? As long as we don't get into some big war or something. But my thought is, if a mortgage broker is crushing it and they're making all this money, right? Why not go meet with a financial advisor yourself? Because some mortgage brokers are like, I'm a finance guy. I know how to, play the stock market. I know how to invest my own money. And maybe they do, maybe we do. But how much cooler would it be is if you found and made friends with someone that could manage your money, and then you guys could create a referral relationship? That I think, it sounds like what you did, but even I think mortgage brokers in general could start doing that, and then just go interview a few of them. Tell them what you do, tell them what you specialize in, and then maybe you'll make 3 referral sources or 2 out of the 3 and pick the one you like best to manage your own money. And then, maybe you'll, that could be a good referral.
And I asked her in the email, I said, do you have a loan officer or broker that you're going to refer your borrower because she's not licensed in Maine?
Right.
And she said no. So I'm venture to say she probably hasn't even been introduced, or she hasn't had somebody like, Jon Maddux come to the office and say,
Right.
let me help you out today. What can you need help with through your borrowers? Because they're looking to make money too and expand their portfolio with their borrower.
Exactly.
So, everybody's in the business of increasing their wealth.
Right. And then a cool thing about financial advisors and why they would work well with a mortgage broker versus a banker is being non-depository. So I would always go and tell financial advisors, hey, I'm a non-depository lender, or I'm a non-depository broker, meaning your client that you manage their wealth is never going to take their money out to work with me. If they go, say, like, they go here, Wells Fargo's got this great rate if you transfer $1 million, and boom, they just took $1 million out of your, out of the money you're managing, and now that sucks because you get paid off your overall, numbers portfolio. Yeah. So that's a good selling point to talk to wealth advisors. Like, hey, I'm non-depository, I'm a broker. We broker to non-depository lenders, and they sell to REITs or they sell to the street, but to Wall Street. But they're never going to be at a big. It's never going to be sold to Chase. There's never going to be sold to a Wells or a Citi or something like that. So that's a good information to give to a wealth advisor. What about you, Austin? Because I know you've worked with your brokers have worked with wealth advisors too. But what are some others?
Yeah, I mean, that just kind of came natural. Being 6 years at Chase,
Yeah.
I would get all these calls, but I can't work direct. So I'd start introducing a lot of these bankers and wealth advisors to my brokers, and then they've built that relationship. And I think people underestimate the power of referrals. It's one of the oldest ways to get business. But let's go back 2 years, when Bobby, our CPA, that we had to use him for one of the CPA letter needs. Investors are fine with it as long as he does his thing. Well, then we did we helped him there. Then Bobby reached out to me and had that crazy 12-pack that we did of those loans. But I had to refer that to a loan officer.
Right.
So, we
broker,
go to him, he brings me business back. I take that business, give a 12-pack to a loan officer because I gave him business. He's now referring things back. And then we helped that CPA's client, who then went and told her friends, referred more to him back.
Right.
And it's just, I have this massive daisy chain from one time. We reached out to this guy one time, and I've probably gotten 15 million total off that one relationship.
Wow.
Or it's like your processors. I get a lot of referrals going down that avenue too.
Yeah.
They enjoy working with us. So we have this one processing firm that charges people double if they don't send a non-QM loan to FundLoans.
That's awesome.
So $1,800 if you go to our competitors, but if you go to FundLoans, it's $900.
That's great.
Like, well, why is that? Well, they just do better work, right?
Yeah.
So people underestimate referrals, and we can go on and on about the avenues, but people just refuse. They give up too easily, or they'll try for like a week. Oh, I didn't get anything from them. Right. We could go all day. Wealth advisors, your old bankers, private money guys, talking to your own clients, CPAs, divorce attorneys. How many podcasts have we named the same things over and over?
Yeah. And
I bet
you'd hope that
1 out of 20 have even tried that. Right. So the referrals in general, just focusing on that, people underestimate it. Reach out to your clients you have done business with, the people in your circle, your network. Just because people know you do mortgages doesn't mean they're automatically going to hand it over. Sometimes you got to put a little
oftentimes
work
they
into it.
don't even think of you. They go, you see them at a barbecue. So, oh man, I forgot you did mortgages.
That's right.
Oh
post
man,
every day, but all right,
I should have told this guy about you. Well, you can tell him now.
Yeah.
Let's call him right now. Let's help him. Yeah, it's referrals. You're right. The power of referrals is huge because there's something about that trust, right? Like if someone refers you a loan or he refers you business, it just comes with the credibility, the trust right away, versus like some person cold calling. Now, cold calling has its place, but if you could take a cold calling or a lead off the internet or a referral all day long, you're going to take a referral,
right?
So you think your brokers are getting referrals? A lot of your best brokers is that their strategy?
If you ask any of my top brokers, they haven't made a cold call. They haven't gone out in the field.
Yep.
They thrive off referral business because they know how to manage that referral business.
Right.
And I'd say we're probably in the same place too. I haven't had to make like cold calls for over a year.
That's good.
Right. It's referral based or people I meet at shows.
Yep.
Those are really the only 2 ways I'm building my business now.
Yep.
Is NAM or AIM, these conferences we go to, and referrals. That's it. Because I understood the power of it. Small things like sending thank you and handwritten card. Those things go so far in building that trust with somebody that they trust you enough
to
take somebody else they care about. Hey, help me. And people don't understand that kind of stuff goes into it too. Are you friends with your broker? Do you have a relationship? Do you care about that person's life and everything else going on? Or are you just trying to get money off them?
Right.
It's like everything involved with building relationships around getting those referrals. It's all intertwined.
Yeah, and these are things that I think people, as they're setting up their goals for 2020, mortgage brokers could go and say, you know what, I'm gonna take better care of my past clients. I'm gonna take better care of them by sending them thank you cards, sending them a thank you gift. I know there's a RESPA, thing, but you could send them a little, whatever it is, little thank you, something that's meaningful. And I tell you, that changes the way they view you. That changes the way a handwritten note goes so far, like a handwritten thank you.
Well, let's look at Preston, right? He's one of my top brokers.
Mm-hmm.
He started, like how we get so many of his referrals and repeat business is after he closed a loan, he'd send a bottle of champagne or wine, whatever their favorite liquor was, directly to the borrower with a handwritten note. Hey, congrats, appreciate your business.
Yep.
And then he was
couple
so
cards
successful,
in there, probably. Yes,
he was so successful at that. I mean, his wife ended up opening the company, who then partners with people like us, where we send out as a thank you, right?
Right.
He saw the power of what that did for his small business.
Mm-hmm.
That now he's partnered up with all these different companies and lenders. Like, hey, see what a simple thank you bottle or card does, right? And we've seen the power. And when we send those out to our brokers as well,
right,
the small things go so much further than people think.
Well, you know who does that is like high-end places. Like you go to a high-end hotel or you go to a high-end car dealer and you buy a car, they give you these nice things. And it's like a special touch. You go to, a Best Western or something, you're not going to, it's just a different feel and you don't get those thank yous. And, obviously you're spending more money so they can afford to,
right.
But then again, like, they could afford to give you something small, right, as a thank you, and I think what mentality, you have to take on that mentality of what are successful people doing, whether or not they're spending a lot of money, you could still do something. It's just the time, the thought that makes that difference. Like if you're taking a little time out of your day, it's expensive to you because your time is valuable, but you're not having to spend money. You can just send a nice thank you note, say a few nice things about what happened along the way, maybe make a joke or whatever that'll make them smile. And then you left that lasting impression on them. And they're going to think of you next time. It's like trying to wow make your client end with a wow. Like I remember I used to look every time when I was on a phone call with a client, I would look for the wow. I'd try to get them to say wow. If you could get them to say wow, no matter what you guys are talking about, then you've like kind of had a little win. Right. Like if you talk to a broker and you're like, yeah, we can do that. And, and we'll get it done in, 16 days. Here, you wait for it and they go, wow. And you're like, yeah, that's wowing your clients is a huge thing.
And I'll be the first to admit I'm probably one of the worst at it, right? Is like you said, when you're taking time out of your day to write those cards or reach out, send a text, send an email, just a simple thank you. Like I fall in that rut of, oh, I don't have time. I'll push it off. And then I'll eventually do it. And you see the reaction. You're like, oh, there's so much more value in that. And you think even when I push it down the road a day or two, and then I'll get to it, whatever it might be.
Right.
And then if somebody else reaches out, like if I find a loan or get a CTC and a broker calls, dude, thank you so much. Just wanted to say, appreciate. I'm like, oh man, makes it feel real good,
it
right?
Totally does. Yeah.
I'm probably one of the worst at underestimating how far that value truly does go, because it goes back to building.
It's easy to forget too when you're getting a lot of business. Yeah. Like when you don't have to make cold calls. You're getting a lot of business. So like maybe right now, a mortgage broker they're crushing it because there's like a refi boom or whatever, and so they don't have time to do that. But what happens when they take time to do that, right? And they're building that future business versus just the now business that they're getting, right? So I think like if you back to kind of what we were learning on our sales summit is like if you can take a little, time to write down some things that you want to accomplish versus just being reactive, then you could say, okay, well, I'm so busy, but at one point today, on my little list, I'm going to check off that I sent out 3 thank yous, right? Called 3 people, left them voicemails, thanking them for their business, whatever it is. You do that every day. It also keeps the gratitude cycle, right? Which we all believe in. It's like the more you're grateful, the more gratitude you have. There's just something about it. I don't want to get too like spiritual, but like
it perpetuates.
this interesting thing that we in life that just somehow, you see a lot of people with success and you hear a lot of, I'm just very grateful. I have gratitude.
Yeah. And it's easy to overlook that. that reoccurring broker, that reoccurring relationship. It might not have to be a broker or your bank relationship, but it could be your processor, or it could be somebody you just take for granted. And you know, everybody has that 3 people that you always should say thank you, but you're just like, oh, they know it's thank you. But you know, we should all take a time out of our day to, like you said, say thank you and make it known like we appreciate you and we appreciate your loans.
And sometimes it just takes a few minutes to send a text. Or not even a minute. It takes seconds. Few seconds.
Yeah, right.
Unless you're writing a
text
real long text. So if we were to like look at a pie chart of the loans you guys did last year, would you guys say like a lot of them were self-employed? Were a lot of them investment properties? Like what would be like the biggest piece of that pie?
I would say personally bank statements easily.
Yeah.
Probably because I purposely try to manifest that. Talked a little bit about that at the sales summit, that I try to make my presence in non-QM known as the bank statement guy.
Right.
I do all my reviews. I teach brokers what I'm doing, complete the worksheet form, break it down, give them an analysis. Here's how we prep for underwriting.
Right.
Give me this LOE, be prepared to source this. That's what, when they get a condition list, they're not surprised. The borrower's not surprised.
Right.
Or the conditions are so minimal, right? So when brokers go through that experience,
they're like, I'm not sending a bank statement loan to anyone else. Yeah.
I've had brokers who I've done 3 or 4 bank statement loans
it's
with.
full doc, but I'd rather send a bank statement.
Well, no, they'll call and be like, do you do full doc stuff? I'm like, yeah, man, we're still a lender.
Full doc.
Oh, yeah, all I ever do is send you bank statements. So I purposely kind of try to manifest that, and I enjoy bank statement loans. I think you're with me. Full doc is just whole different complexity. There always seems like more goes wrong with those than on a bank statement.
We do those
loan,
really good because of our the quality of our underwriters. They really get
just what they've seen.
They get that stuff. But I hear what you're saying. Like that's what you've
as
done
an
the
AE
most
perspective, right? It's just as an AE, you're not you can't spend hours and dive into tax returns and understand it all, right? That's what you need the underwriter for, but you can't really get to that point till you get it to underwriting. Bank statements, all we need is 12 or 24 months, and we could pretty much tell you the entire file right there.
Yeah, and you know if they qualify right off the bat.
So I'd say probably 80% of my business, 75% of my business last year was bank statement stuff.
That's good.
Yeah,
that's good about you.
Yeah, about same percentage probably, and then the other 20-25% is probably the no income, no asset loans for investors. Just easy for takeout loans. It's easy for purchases, cash. It doesn't have to cash flow. That's the big incentive right now, that it doesn't have to cash flow for the property. But and then the remaining 5%, it could be a combination of full doc, asset depletion. I'm seeing a lot of
actually I get a lot of asset loans now.
Yeah, a lot of asset depletion, assets only, especially with combination with full doc income or bank statement income.
That's a great product. I remember always scratching my head when I first got back into mortgages in like 2012. After I took a few years off, I was like, "You're telling me this guy has $1 million in the bank and his loan's $800,000, and he doesn't have the ability to repay that loan?"
Right.
I see it right here in his bank. He has the ability to repay that loan in one lump sum.
Yeah.
And it just always scratched my head. So when we launched that product, it was exciting to me. And you guys starting to see more of that?
Yeah, it's a lot of conversation starters. It's a lot of, I'm doing one right now, 2.3 million in cash out refi. Has Social Security income, but has a ton of assets, and we're depleting his other real estate owned. Easily qualifying. This guy is wealth rich, and gonna take down a loan for him.
Like, if someone has, a house free and clear that's worth $2 million, and then and that's his just rental property or second home, and he's got his, main house at $3 million, and he's got Social Security, he's got cash in the bank, but just not enough. And like, if this shit hit the fan, you could either rent out the second home or sell it or whatever. And you're telling me like this guy can't make his, there's just a lot of nonsense and not make sense lending happening out there.
Yeah, and the whole combination of income streams is probably the most makes sense thing. So you'll allow a borrower to get a loan full doc or all asset utilization, but up until we rolled out those guides, you'd never let him do isn't the combination
combo?
A bit more safe?
Yeah, like
right?
he's got good income, he's got a bunch of cash.
You have a steady stream and a massive pile of cash you can dip into at any point.
Right.
That to me is already a safer borrower than if you're making him do either or.
Yeah.
Right. Yeah, I can qualify full doc exactly at a 49.9 DTI, and I got 3 months of reserves.
Right.
We'll give that guy a loan all day.
Right.
But the guy with $1 million, I don't know. It didn't make sense. So we get a lot of those asset ones getting creative now.
And educating the CPAs about that product would be a huge way to get business. because CPAs, their job isn't to go get educated about what loan products are there. But, I mean, I would suggest get a place like a restaurant, invite as many CPAs you could invite, sit down, buy them all lunch or buy them all, and then just have a round table and tell them about your products. Like if they took our product list, mortgage broker, got 6 CPAs, at a table or at a bar and like sat them down, told them what we could do.
Or I love free lunch. Just bring me.
Yeah,
I'll talk to CPAs for
you. Bring an AE and he'll tell the CPAs everything we do. And
trust attorneys too.
Yeah.
Trust attorneys, divorce attorneys.
Trust attorneys is huge. They got nothing but assets in there. Yeah.
For sure. Mm-hmm. There's so many ways to get business. And that's what's exciting about these products, I think. And then, do you get brokers that call you just for intel? Like, hey, what do you do? Like, tell me about like your products. Cause I would suggest brokers just pick up the phone, call an AE, call one of you guys, call one of our AEs, just call our toll-free number, ask for an AE and just ask for someone to explain all the products and like the ways that we could help help. How would I pitch a CPA? How would you pitch a CPA? And then yeah, and if they're around, local, or if they're in, even maybe it's Orange County, maybe it's in, sometimes we go to Arizona and visit, on trips, or Florida for different, broker conferences. We'll come out and meet with you, if we schedule it, we'll come spend time and invest in the brokers as well as their clients.
Yeah.
And their referral sources. So that's good. What are your comments about the growth of our team? I know you started when it was really small, but we've doubled in size, we've grown a ton. I know right now we're so backlogged. We're a little bit backlogged in underwriting, but that should be over in the next 2 weeks. We just met about it, but it's a good problem to have. But what have you guys seen?
Surreal, man. I mean, just, we started in this office almost 3 years ago, April.
Yep.
And I think there was, Dave and I counted, we had like 11 employees day one, 11 or 12.
Yep.
And then I was sitting in the corner when we couldn't even fit everybody in the room.
Yeah.
And that's not even every single employee that we actually had, right? We have some out of state,
Remotes,
some remote that couldn't come, vacation, whatever it might be. And
it's exciting.
I mean, it was one of the craziest things I've ever seen.
Yeah. What do you think is some of the best changes that we've made on loans?
Just staff wise or in general?
It's general.
Yeah, I think as a general, I mean, the biggest move was the guidelines, I think, in 20.
Exactly where I was going.
Mm-hmm.
Yep.
I mean, you can see it in the numbers. Jerry, when he was going through the breakdown of the numbers at the sales summit, 83% of our loans are approved. And he was like, he just, it seems normal. Like that's what he's used to. But in my perception and knowing non-QM, 83% seems like it's pretty damn great for
that's
non-QM
a great
lending.
Percentage, yeah.
And then 62% of our loans had exceptions on them. Yeah. So you want to talk about when non-QM calls themselves the make sense exception-based lender. Well, let's prove
that's
it.
What we
can show you the data behind it. So the only way we got there is by making our own guidelines and getting off the nipple of the investor, so to speak.
Yeah. Yeah. And truly doing makes sense lending, redefining non-QM to not just these other boxes, but like outside the box, like looking at it holistically and seeing if this is a good loan credit wise. Is it a good credit decision versus does it just perfectly fit in this little other non-QM box? And I think that's what a lot of our competitors do. They just, fits in this box. So yeah, we get your loan done. Whereas, we're looking at it in a holistic approach. And I think a lot, it goes to you guys and our AE team and scrubbers to like, we don't let a loan in if it's just terrible. If we see a loan and it's just crap, like we turn it away or we turn it around or we re-educate the broker on, why this is this loan. And I think that a lot of probably goes to you where you're doing some of the upfront scrubbing on the bank statements. Like, okay. And so you sometimes probably will turn a borrower or a broker and say, this loan is not going to qualify. Have you done that?
Yeah.
Yeah. So, I mean, the more you do that, the higher our percentage goes up because you're stopping them from wasting 6 days, in intake and scrubbing and underwriting and then, to get a decline.
Well, that's the goal. I tell them, give me a general overview and then how much the borrower needs to qualify. So I got $1 million purchase, 750 loan amount, 700 FICO, whatever. Here's the bank statements. They need 12 grand a month to qualify.
Right.
Then we'll go through and do the breakdown. And before an expense ratio, you're at 10 grand. There's no way. Right. You're not going to, don't waste your time, move on.
Yeah. If you need 20 grand a month and your bank statements is only 8.
Yeah, you're not getting a loan.
Yeah, it's good to know that before you submit the loans.
Right. Well, I think some of it is on that reputation.
Yeah.
Not only as us as individual AEs, but as fund loans.
Mm-hmm.
We have certain minimums, loan amounts, and FICOs. Austin pointed out we approve 83% of our loans, but when you guys went over our average loan, which is what, like 70 LTV, 720 FICO, like these are good great loans.
Yeah.
And when you hear high level exceptions and high level approval rates, some people might think we do everything and, under the table, but we do solid loans. We, for everything from our analysis to our team here that we've added.
Right.
We take care of our quality loans. We take care of our broker relationships, and thus they give us better packages. We, then fund better loans, and we keep on going. And it's that reputation that I've learned in this business is key.
Yeah.
When you go to shows, everybody knows everybody.
Yeah.
Fund Loans, I think, has that reputation of getting good, great jumbo loans done and getting them done in a timely manner.
Right.
And, non-QM's not for everybody, but this is all we do.
Right. Yeah. It is all we do. I mean, we don't do any Fannie Freddie. I was just hearing something like, I forget, it was one of our competitors. I don't remember. I don't want to name names, but they do a lot of agency loans. And I didn't even know they did agency loans. So I was like,
now I'm curious.
Interesting. The word lend is in their name.
Okay.
Narrows it down a little bit.
So what do you think? I know recently or last year, something we thought was going to be maybe a big kind of a hit to us all, the whole industry in general, stopped doing borrower prepared P&L type of loans, just because there was like I think not FDIC, the CFPB came into one of the competitors.
Yeah, I was probably the first one to be outraged about that. And I've had zero issues with it since.
Yeah, because
to be fair, I was like, this is going to ruin my business.
Right.
I had one person bring it up. Everyone else is like, all right, here's options. I'm like,
there's a CPA prepared, or here's a CPA letter.
Right. Yeah, I mean, I thought it was going to be way worse than it was.
Yeah, and I what were you going to say?
Yeah, I think it wasn't an issue because we have so many different ways of calculating income.
Yeah.
You realize like, all right, you lost one of your 10, but you still have 9 other ones. Let's figure out how to. That's why I like this business. Everybody's like, all right, how can we get the loan done?
Right.
Now they have that one gone. Doesn't mean the loan's dead. Let's just figure out, out of the 9 other ways how to get it done.
Right.
But it kind of vanished like straws, plastic straws. Like one day it was like here, and then the next day, like everybody in the business, nowhere can you find a barber P&L.
Like you like put a straw in your mouth.
Yeah.
This tastes weird. This is cardboard.
Yeah.
But that's how.
Where's this plastic?
What a great analogy.
Yeah, you just came, then all of a sudden it was gone, and then all right, back to life.
Still can get my drink.
Yeah, it's like plastic straws or paper straws suck, but you're still going to use it.
Yeah.
Just because we don't have the best option out there doesn't mean there's not something else you can do.
You're still drinking your liquid out of the cup.
You still get to the same point. Yeah. Let's talk about anything you guys learned in 19. Anything that you're like, I just want to get that behind me. I don't want to do that this year. Anything that like, we talked about habits in our sales summit, but like, what is anything you're glad is behind us in 19? Anything?
It's not really around the business or fund loans. It's how I figured out how to do my job. So I'm so meticulous and a borderline perfectionist in what I do that I didn't have enough knowledge to really be the AE I am now. And I'm still kind of growing through it, that I'm probably 2 to 3 times busier now than I was at this time last year. But last year I was just anxiety ridden, and I was constantly like, my work days were 4 or 5 hours longer, and I couldn't sleep. And first thing I do is wake up and start, what did I have? What did I forget? What am I missing? Right? Compared to now, I have fun with it all the time. Like I'm not stressed. I figured out my routine, how to do things, how to communicate with brokers, the best way to price and approach, and how I fill out my forums, and what can help the team and everything. Right? It was the biggest thing I learned, and obviously those things help to an increase in revenues and growth and your volume, right? So my big thing from 2019 was figuring out how to be the best AE, but also having that work-life balance, having fun with what you do. Yes, I enjoyed it, but a year ago I enjoyed like the freedoms and the money that comes with being an AE, right? Now I enjoy every aspect of the job. I remember I used to answer calls of brokers like almost annoyed sounding. Had nothing to do with them.
Hey, it's Austin.
Kinda.
Yeah.
Just like short, like I'm busy. Like, what do you
wants.
need? Right.
Right.
And now it's just like, what's up, dude? What you doing, dude? You know,
Yeah.
it's a different. So my biggest growth from 2019 was trying to, okay, I know the business now.
Yeah.
I understand the industry. I know how to be successful in it. Now, how can I interject who I am and make the account executive role Austin, right?
Right.
How can I have fun with it and continue to talk to these brokers and build friendships and go on these events and have fun with it, but still being a high producing AE at the same time. So that was my biggest thing.
What do you
of
think was the
19.
biggest contributor to that? Like, what did something click in your head, or did you just have more experience, or did you just say, you know what, I'm going to focus more on myself, on my health, and my, or what was there anything, or a bunch of different things?
Big focus on myself. I went through the last 12, 18 months of my life has been huge into just personal development. And FundLoans is a big contributor to that because here I am, one of the first dozen people at a startup company who's just blowing the non-QM game out of the water. Everything is just red alert. I have a massive opportunity ahead of me. And I knew that if I failed at this for any reason, if I didn't do this to my fullest capability, if I didn't put everything I had, it'd be the biggest regret of my life. Right. So that's when I was in this weird place of, okay, I'm not where I want to be, but I see the opportunity. Can I be who I want in the opportunity and make both work at the same time?
Right.
And I just started going on this. I mean, I started doing the whole, and I still do to this day. I listen to probably 2 to 4 hours of podcasts a day and became a big reader, and then talking to people and opening up more and finding a mentor and all these different things. And it's like, now it's
personal
just,
growth.
Yeah. Now it just seems effortless.
So good.
Like it just, the job just feels effortless now, and I'm busier than I've ever been. And that's one of the coolest feelings.
That's cool. What about you, Alex?
Well, personally, I think the biggest thing in 2019 was just learning to engage and have that conversation, whether it was good or bad, in terms of like, it's easy delivering good news, but
everyone loves to get good news.
It's the bad and it's the challenging news. It's the, we have a small issue. Making it faster. As I was progressing the year, I made that call faster and quicker. Once I, of course, I got my facts straight. I didn't want to give incorrect drama if I didn't need to. But I always thought that delivering the worst news was like the end of the world for that broker. In reality, you call that broker like, okay, well, you know what? Let's figure out a way to get it done. And then just like it wasn't that big of a conversation,
right?
And I wasted all that time and all that personal anxiety on that personal like. Oh my, like I can't, nightmares at night, when in reality, everybody's in this business to get the loan done and figure out a way to the best benefit of the borrower. So let's just keep on going. And it's that big step. And with a lot of new AEs, you're going to have that phone's going to be 5,000 pounds. But the quicker you could make that phone call and the quicker you could overcome that, that obstacle, it just makes a world of difference for that relationship, for that file, for your overall health. And you realize, it wasn't that big of a deal. So many times I thought like, I'm going to lose this broker. I'm going to lose him. No way he's going to call me back. Call me back. Hey, I got 3 more scenarios. Let's keep on going.
Whole lot of overthinking.
Yeah. It's just like, we're like, okay. Like, you understand.
Well, you think about it. They get that call from other lenders too, because it's not. And
or they don't, but he's willing to make it.
Yeah.
Right. Exactly.
And they've had those calls, and they've had people not call, and then they have the mystery of where's my file, what the hell is going on, and but I love that, and I think this goes to not only you guys and the brokers, but this goes to the brokers to the borrowers. Like the quicker you make these calls to the borrower and let them know, here's our challenge, I got a few options I'm trying to work through, that the quicker you do that, obviously you want to have your ducks in a row before you do it, like you guys have said, but it just keeps the problem from getting worse, because you wait and you don't call that borrower back for 3 days, then maybe they could have solved that problem within the time or whatever.
Yeah. And this goes hand in hand with kind of like FundLoans progression. So like my internal progression, once we got our new guidelines, and I'll touch on this again, we had to make that call less and less because we took the best of all the guides that were out there from every single investor. We tweaked them. We took a make sense approach. So we didn't have to, ask Big Brother for that help on the file. We made it internally. We moved on, pressed on forward, got the loan done. And, the FundLoans progression with our new guys, with our new staff, went hand in hand with me being able to be more confident in our product, our brokers more confident in our product, our own customer more confident in the product.
Right.
And it just, everybody's thriving at this moment. You know?
What are your goals for 2020?
So I remember when we did this last January, my goal was to do $150 million.
Hey, big,
almost
big
missed
goals.
that by 50%. But same thing. I mean, the goal is just to always improve personally and hit bigger numbers, right? So I want to do double what I did in 2019 though. And I feel like like I was saying earlier, what I did learn, I'm now primed in a place mentally to be able to get to there because I don't have the overthinking and the anxiety and the nightmares. Literally, I take it dead serious when he says that. Like I'd wake up in the middle of the night. Oh shit, I forgot that email. I didn't tell this person. What am I going to do?
Right.
I don't fall off the train, whatever it might be. So now I'm past all that and I know how to do it. I think I can, I know I can do at least double what I did last year.
Cool. About you?
Yeah, she said 150. My goal is 150 for this year, 150 million. You know, and whether that's 12.5 million per month or what have you, but it's gonna be 150, and you know, that's kind of my end goal for the year for personally.
Nice.
Yeah, no reason why we can't do it.
None.
Any new products you just want to come out?
Stated owner rock.
Stay on a rock.
His suggestion.
Yeah. I mean,
man.
I can't get that question enough. Hey, can I do stated? Is it owner rock or is it investment? Because investment you could do no income, no asset.
Yeah.
But for the owner
People
rock,
call
yeah.
it stated. It's just, but it's
Right.
it actually the reason why it's safer is because you're not lying, you're not
Right.
putting any income down, right? But
Mhm.
like that's what got I think people in trouble was because you show up, you go to court and the judge would say like, you know, this poor lady who was a teacher, right? And you know, she's now in foreclosure, and they pull up your loan application and it says you said that the teacher made $25,000 a month. And you're like, the mortgage broker's like, that's what she stated, and she's like, no, I didn't. You know?
Well, it's the funniest when you tell a broker it's not an owner, and they're like, well, they're gonna move out and rent it.
Yeah, right.
Come on. I don't know. I think that maybe not stated, but I get a lot of these. They have a 15 or 20 LTV.
Right.
Yeah, gotta be something we can do for somebody with all
Can
this
we
equity.
ignore the income if the LTV is low enough?
Right.
LTV, and like one thing I take from our underwriting manager Jerry is reserves has a huge indicator on whether somebody will foreclose.
Right.
I think he said even 3 months is like a huge difference in percentage.
Well,
So
it
maybe it's-
matters. Like,
yeah.
think about if someone doesn't have any savings,
Mhm.
then they have no way if shit hits the fan to do
Right.
anything, right? Like almost anyone in this economy can get a job.
Mhm.
If they lose their job today, they could go out and find something tomorrow. Maybe they could find something in a month, you know? So if you have 3 months of cushion, that's huge. I mean,
Yeah.
compared to like someone who's got nothing and they got credit cards in there, you know,
Right. So maybe we do have a 50 LTV, good credit borrower
with reserves.
with reserves, and say, okay, you have the ability to repay, for X amount of months,
Mhm.
and come out with an alternate program
Well,
like
people are
that.
toying with it. There are some products that are being talked about that are like, some banks have some rule that if they have 6 months payments and they can kind of ignore some of the DTI stuff. But so I do think it will evolve. I think the worst thing that could happen would be state income zero down, right?
Mhm. Right.
But maybe
Yeah, none of that on purchases, man. It's got to be LTV driven.
Yeah, LTV driven, and and there's also the skin in the game thing,
Mhm.
But so yeah, like a something that's less ATR, driven and more equity driven, more credit driven. Like especially if you look at someone's credit and go, all right, their payment was $3,000 a month. We're refining them into a lower rate. Now it's $2,800 a month. They've never missed a payment in 3 years. What
Why
what's
would
going
they
to
make-
change?
Yeah, what would make them
You know?
They're figuring it out somehow.
Right.
Yeah, especially if it's like a low LTV, right? Then it's like they're not gonna foreclose on that, So I do think there's some new products that will emerge. My prediction's always been that history rhymes and it kind of repeats in ways, and when big money, like the money on the street, the Wall Street money, if there's a stock market issue and drops, then they go to the safe havens, and then that's usually bonds, mortgage bonds, and then all this money bulges into the mortgage bond market, and then there's pressure then now to create more product because they want to deploy the capital, and so what that pressure does is it expands guidelines. So, if you see a big stock market crash, not crash, but like correction, or and just this whole thing with the IPOs kind of going away, the WeWork thing and all that, like IPOs sort of kind of backing off. A lot of the venture capital, a lot of this money is looking for other ways to deploy. You're going to see a lot more product development in 2020. That's my prediction. I think there's going to be, and I love product development. It's one of my favorite things about this business is creating new products. So I'm excited to, probably Q2 we'll have some new products, and I was hoping Q1, but
soft drop. Is that soft drop right there?
A little soft drop, yeah. Q2
All right.
and that's right in perfect time for summer, right? And who keeping your finger on the pulse of who's buying out there? Is it millennials? Is it what do they need? Is there is there issues with millennials who have multiple sources of income but they have student debt, and how to solve that problem, because millennials are starting to age to the point where they want to start families and they want to, and they're a huge generation, right? It's a huge demographic. I think it's bigger than the boomers, right? It's like, it's a big demographic. So there's going to be products built for them. Even though Fannie and Freddie is probably trying to build some products, even though they're retracting out of the market, they're going to narrow their products down, and they're going to back up. They don't want to be such a big buyer of all these loans. So a lot of guys like us and other lenders are going to start coming out with more products, which is going to be cool. Okay. Just going to mean that 2020 and a few more years after that, we should have a good run. That's my crystal ball.
I'm looking forward to it.
Anything can change though, depending on the election and
election year,
the powers that be.
A lot out of our control.
Yeah. So all we can do is just continue doing what we're doing. What advice do you have for mortgage brokers? Like, is there something that is a pet peeve, like that mortgage brokers do? Like, let's embarrass them real fast. Like, well, this is funny. Like, give me a couple stories.
Should I name names?
Don't name names. You can call them, John Doe and Jane Doe or whatever you want to do. But like, is there something that's kind of like, God, this guy or this girl, like what? Why do they do this?
Yeah, it's like, what are you gonna say? I love all my brokers. They do everything right.
They call it.
If I had some advice,
gratitude. They're all perfect. They're grateful.
It's just like there's so many people that touch these loans. It just going that extra like a little bit of a mile to like understand your borrower. The best brokers I have know the 1003 inside and out. They know.
Did they take the application?
Assets, income.
Right.
Like when I call them about like, hey, did you know that this was a second home, but they don't have a primary, things like that. It's
right.
It's just that conversation that you don't want to have, but like, it's cause it's so obvious. And just take that extra, like the best brokers I have take that extra 2 seconds and they know their files inside and out. So when so many people touch the file, so when an underwriter or account manager, we reach out or call you or email you, then everybody's like, all right, we're still in the game versus like, I had no idea that came out of left field. Like,
Yeah. So I didn't know it was a manufactured house.
Yeah. Just a little bit of stuff. We know that everybody hustles, just like take that.
Things on wheels.
Yeah, right. I didn't know that I'm looking at the appraisal and this thing's on wheels.
Like we have a high like conversion rate to funding these loans, and we could do it on most of these packages.
Yeah.
Just if the package comes in and it's not what you said it was,
right.
All of our expectations are gonna get let down. So
yeah. What else?
My frustration is not even their fault. And it's more the industry. So it's just your broker giving you the trust and having faith that if you say you're going to do something, if it's going to go this way, or trust my team, the constant pushback or almost fighting you on it or not wanting to give you a condition because they don't think it's going to really prompt the response.
You don't need that.
Yeah. So it's,
but I need it actually.
Or not even, hey, just get me this. And I promise. What? And it just opens up a whole nother series of questions. And then they fight it and they don't even ask the borrower for it. And then they just try to give you so much pushback. Not having that. But again, I get it, right?
Yeah.
Because
our industry has become so cumbersome with all these conditions. And
not even that. There's just so many non-QM lenders that don't know what they're doing.
Right.
That have, diffused any ability for that broker to trust an AE and what they say they're going to do, right? So
right.
It's just that lack of just, hey, trust me, if we do it this way, you're going to be fine.
Right.
If you're going to make me go ask to borrow for that or cancel a loan, we're not getting it done.
Yeah.
But we're their fourth lender all of a sudden. I got a CTC on a loan today. The lady started the loan in August. We are her fourth non-QM lender. We CTC'd it in 32 days. So 32
tough
pisses
loan.
me off.
I wonder if they figured out how to get it right.
Yeah, but 32
still.
to me, I'm like, damn. She's like, no, you don't understand. 3 other people couldn't do this in general. I don't care if it would have taken 60.
Yeah.
So it's just now I have
was that
trust,
was it a
right?
good, like, you don't have to say, was it a good broker? Just the file was not fitting guidelines.
The borrower was just extremely complex.
Yeah.
Right. Multiple but if you look at it, it's a good loan, right? Yeah. We just had to navigate through all these trenches and stuff to get there.
Right.
So at first I got a lot of pushback, right? No, you're just like everyone else. Everyone has made these promises. And when we're just casual about it, just give me this, it'll be fine. You're a little too,
really?
Yeah. Like, no, what do you mean? Do you want to get on the phone? We'll even get Jerry on the phone sometimes. He's like, nope. You send that in, I'll get your exception. They're like, no, it's not that easy. We're like, but it is.
Yeah. Yeah. Because when we get a conditional approval, like, we mean it. Like, our conditions are for the final closing. Like, we're not a lender that will give you a conditional approval and then pull it back out 2 weeks later because, we missed something. That's one thing that I hear constantly, that our approvals are legit. Get the items we need. A couple things pop up based off, credit, things like that. But for the most part, it's once you get approval, I'm like, all right.
Yeah, we're not. That's exactly, and because we're not that person that once you sign off half the conditions, 6 more appear.
Right.
But people have been through that so many times that I can't blame them for my frustration.
Yeah,
and I get my team in and out. We've been around it since the beginning, so it's a different perception too. Maybe I'm a little too lax when I'm just like, yeah, no, it's not a big deal.
Yeah,
but it's just
that's a good point.
That's how we are, though.
You could do the flip side, like, oh man, this is gonna be tough. Like, get this to me, and I'll do my best to get it done.
And just always be the hero.
Always be the hero. Yeah.
We'll edit that part out so I can use it.
Yeah. One of, if I may,
get rid of the right of rescission, please. On refis,
because there's like 2 of them now with the CD and the
it's a refi. They have the mortgage. They know they're getting another mortgage on their own property.
Doesn't make sense.
Please get rid of it.
Yeah, there's a California right of rescission, and there's other states, but I don't know. I think there's a bunch of them that have the rescission. But
no, you're pretty good at getting stuff like.
You know what? Back in the subprime days,
call
your
senator.
Call your senator. Back in the subprime days, I remember sweating during that time. Like, oh god, the
rescission
day, because I don't know what it was back then, because we charged too many points, and you'd always be like, are they going to take this? No. You've sold it to them, and then they got 3 days to think about it, and then there's always someone calling, trying to give them something better, and you're just like, 3 days up, fine, and then you come in, look at the fax machine and make sure you didn't get a rescission notice, like fax to you back saying please cancel the loan. But one of the pet peeves I have as a CEO of the company, but also as an originator doing these big jumbo loans myself, in the past, and then also seeing a lot of white elephants and seeing a lot of properties that are, the broker thinks this is worth $18 million,
I have an appraisal with comps 90 miles away.
Yeah. Like I think if you're going to get into doing these loans that are 7 million, 9 million, 12 million, 8 million, all those type of loans, take a minute to do your own due diligence on the loan, like on the value. Because the value, when it gets to those, anything over 5 million, it's so driven by value, right? Like in location and, so if it's in like Bakersfield, and it's a $10 million house and you're like, what does this guy have under? Is a gold mine under there? Like, what makes this the $10 million? So I think what brokers might be able to do better when it comes to this is just to go into Redfin. I know everyone hates Zillow, but go into Zillow, maybe look at Realtor, whatever, and just see if there's comps on a value, and look at an appraisal. Take a 5-minute look at the appraisal and look and see. And, these days you don't have to worry as much about appraisals as we did in the past, because appraisers would give you kind of values when you needed them sometimes. But now appraisers don't have a reason to give a higher value, but for some reason still, maybe the appraisal was done for a estate sale or something else, and it wasn't ordered by, a firewall or AMC or whatever. But I think if I could give any advice to the brokers is just, take 1 minute, Google the address, see if there's some values. I know you guys do that on your files, but sometimes we just get these white elephants, these crazy looking Taj Mahal in the middle of the desert, like in an area that there's no other house like that. And it's like, maybe it's a 10 LTV, we'll think about it, but like that's, someone told me one time, a fund manager told me one time, a $10 million house could quickly become a $5 million house if the if there's no buyers.
Right.
So, anything else, any kind of advice that you could give on that front? Because I know you see a lot of big loans.
Yeah.
What else can they do to make sure that big loan is going to be a success?
Yeah, I think setting the expectations for the borrower as well. If a borrower, like how many times have borrowers called any of you guys and said, "Hey, my home's worth $3 million."
Yeah.
And then you get 2 appraisals back and it's worth 2.2 million, and you're already at 90 LTV now. So it's like you said, doing your homework on the value, and then set expectations with the borrower and say, hey, I know this is your fourth time going around.
Yeah.
But first time working with me, working with FundLoans. We mean what we do. So I think the borrower expectations as well as doing a little your homework is huge in our non-QM space.
And we have a chief appraiser. So if you have a question and you're like, I don't know if this value's there, email it to the AE and we'll get it in front of our chief appraiser.
Do it all the time.
Yeah.
Anytime there's a value question, send it off, and within 24 hours, we're going to have a value check back. Yep, I think it's in that range, or no, you're not going to be realistic, right?
Submit that loan, yeah. And then we have confidence that this thing is going to kind of fly through, which is great. What are some things you guys could share with brokers on how they can have an incredible 2020?
Use FundLoans.
Yeah, FundLoans.
Duh.
Yeah.
And I don't want this to be a commercial, obviously, about us, but there are lenders that do agency, like we touched on earlier, agency and non-QM. But
I think there's a lot of brokers leaving a lot of business on the table. Okay, so if I did have any advice, it'd be just ask. There's so many loans that I will get in that conversation with the broker about the different products and things we can do. And they're like, I had a loan 2 months ago you could have done.
Right.
And they'll call the borrower, and the borrower went somewhere else and got it, figured out somewhere else. I still have so many conversations where brokers don't understand how expansive non-QM truly is.
Right.
And you can still get a great rate type of thing.
Yeah.
Like when we are doing these, I have one in right now. Primary borrower is bank statements, 12-month bank statement. She has a non-occupant co-borrower who is full doc with asset allowance. So he's doing our combined income source. The father is. She's doing a 12-month bank statement. She's getting her loan at 4.5%.
Yeah.
Something wildly outside the box. Non-occupant co-borrower without going full doc. And you have all the wildly outside the box, and she's still in the 4s.
And so, maybe that borrower were to come to a broker and said, maybe it's the daughter, right? And she's, in her 20s, it's her first house, and she just doesn't qualify. And then you turn her away as a broker. You're like, I can't, sorry, you don't qualify your W-2s. I looked at your yeah, you're not gonna be able to buy this house. But someone who's experienced and knows, well, what else can we do? Would your dad be willing to co-sign? Would your uncle, whoever, right, be able to
get a gift?
Yeah. And you get a gift. And then you just start going down those questions of, how could we maybe look at making this deal work? And I think people do that when they have limited business more. Like a broker might be like, yeah, I don't have 20 loans banging down my door, so let's dig into this a little bit more. But all it takes is a few questions, just to ask them a few questions, right? And I think you can add value as a broker to your database, your borrowers, your realtors by being that. It's almost like a practitioner. You're like you're inquisitive about potential opportunities to make a loan work versus just, sorry, can't do it. No.
Yeah. And I still get all the time, like big time brokers saying that they still don't do non-QM because it's too hard.
Wild.
And and they haven't done non-QM maybe since like 3 years ago. And it's like I just want to go into their office, and maybe I should, and say, hey, I will do this with you to show you how easy this is, because they're already heavy producers. They're already bringing a lot of loans. The thing about I like about non-QM, it's you do the bank statement loan, you coach them up on their tax returns. In 2 years, you take them full doc, or you keep on doing bank statement loans because it's not worth it to go full doc.
Right, right.
But the rates last year in non-QM was high 6s, high 7s. Now it's like Austin said, in the 4s, consistently.
Yeah.
So it's like if you would have did a bank statement loan last year, you were already probably refied them again this year.
Right.
There's just a whole portion of your business that you're not adding yet because of the non-QM kind of idea. But it's so much different now. Find that lender. My advice: find that lender, find that AE that is willing to grind it out for you on the first one.
Yeah.
First one's generally the toughest. New people, new staff, and after that, you will find it so much easier to get these non-QMs done. Happy borrowers, better expectations, and then future refi
and when
business.
you get a loan done that other people couldn't, they all of a sudden now are kind of your biggest fan, and they tell people about you,
right?
Because they're so happy.
It gives that LO a little bit of a confidence boost.
Yeah.
Like, damn, I'm known as the guy who got the one no one could do done, right?
Right.
That borrower came to me desperate. And then now, what do you think that'll do for you? You get referrals.
Right.
And then the whole cycle starts all over.
And then you're not just grinding over little eighths of rates or like, I remember as a loan officer back in the day, you would have a borrower you thought was good. You order the appraisal, then they come back and they're, I saw an ad and these guys have no underwriting fees and you're like, and like over $600, you just lost the loan. You're like, this stuff is more about getting it done than like the little grinding on the eighth of rate or tenth of a rate or, $500 fee or whatever it might be. But it's if you can get this down, and then it all comes down to why we're doing this, right? We're obviously doing it to help people, which we love that part of it. But at the end of the day, we're also getting paid. And when you're doing jumbo loans, and I know you guys have done the math probably on some of your broker's checks when they find a loan.
You see it right there on the CD and the LE,
like
how much they're making.
It's
good for some of them, man.
Yeah.
Right. Yeah, and so
and I'm happy to help them get it done when they're making what they're making.
Yeah. And then, it's exciting because, and some of them maybe have never made that much on a deal before. But then they get the taste of it and they're like, okay, I want to do more of these. Like, right? Like, because in this day and age with Dodd-Frank, we have to get paid on BIPs. So a $300,000 loan or $100,000 loan, you're getting paid, maybe your comp's 1.25, 1.5, whatever it is. When you see those checks versus $1 million loan, $3 million loan, it's quite a big difference.
Yep.
Especially if it's as easy as we're saying it is, right? And try us out. It's gotten way easier.
Yes.
That was one of my 2019 goals, was to make non-QM easy. Because one of my biggest pet peeves was how hard it was. And not naming names, but there was an angel in the first part of the word, was so hard to get it done. Like, and that was, granted 2014, 2015, early on, but it's just gotten so much better, so much easier. And, I haven't sent a loan to Angel Oak in 5 years, but 4 years, but, I still hear, and we hear it at the trade shows sometimes, like it's just hard, 45-day close, and occasionally they'll come through with the fast close, and you'll see it on their LinkedIn or whatever.
With the perfect file.
Yeah. But I'm proud that, and we should do some data on how quickly some of our, what's the fastest loan you ever closed?
9 calendar days.
And
bank statement owner occ purchase.
See, that was an owner occ and a bank statement. It wasn't a no ratio.
Correct.
And
9 calendar days.
And what would you say is the average on your file?
The average, I would say, anywhere from 21 to 27 days. I'm fully confident if it comes in on the first or second of the month that we're going to fund it same month. I think a lot of non-QM lenders can't really say that. And you've, upper management here at FundLoans that put it into place for us to make that a consistent goal in 2020 as well, with hiring, 3-4 new underwriters, just because you saw this, propelling. But, I think that's the key, is our ability to not only become expansive with guides, but our ability to beat the expectation of, when somebody emails me and saying, hey, is 30 days enough on an escrow? I'm like, yes, absolutely. And then when I see, longer, then I'm like, oh, I don't need all that time, because time kills deals anyways, but
it does.
But yeah.
What about you, Austin?
So not my fastest, but most proud of. I did a 4.4 million bank statement loan in 17 calendar days.
I'll take
Nice.
that. I'll take exchange.
Yeah, you
I'll take the 4.4
instead of 9 days.
Yeah, mine was like 400,000.
Hey,
That's good,
That's still
though.
fast, though.
Yeah,
That's
it's
still
good.
fast. What was the fastest though?
I think it was around 11.
Yeah.
It was like a full doc, something like that. Yeah. I mean, I'm not counting no ratios because we've gotten some of those done in like 7-8 days, but those are non-trade, business purpose, no income. I mean, you should be able to get those. If you get a
can't
full
close
package,
that
those
loan
are,
in 12 days.
But a documented income, I'm like 11 or 12.
That's cool. Right on. Well, I'm excited about 2020.
What's your goal for the company?
$1 billion.
Billion.
We're gonna do $1 billion.
1 billion.
We're gonna.
Well,
do
we have
it.
300 million right here. So
Yeah.
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 So everyone else got to do 700.
Well, we hired 15 AEs.
Yeah, we got
mean, that
yeah,
sales
room-
summit was nice. It was phenomenal.
That
to
room
see.
looks crazy considering we just got it 3 months ago and we had like 5 people over there. Now it's full.
It's full. It's full. It's a good time to
Yeah,
be
2
in the
office
mortgage
spaces.
business.
It is.
And with these the product expansions, the all what's coming. I mean, I just saw some articles that was, I think it was CNBC saying that like values aren't going to go down because there just isn't enough supply. And they said even in the luxury market, there's a restriction, the constriction of properties. So for some reason, I think some of it has to do with state, legislation and not building new, a lot of these builders haven't jumped in to build, the big tracks that they used to build. They're being more cautious, more careful. There's not a lot of good, labor in the construction business out there, and fires that have happened that have just, took out a ton of homes that, but I think, and I think with wages and with people with jobs, there's just more people wanting to buy and able to buy. So I think the values will continue to go up. It's going to be a good year.
Looking forward to it.
Yeah.
All right, guys. So last question. What is your favorite failure? It could be favorite failure in your life. Could be favorite failure last year. Could be favorite failure when you were a kid. You bumped your knee on a table.
Favorite failure.
What's your favorite failure? Because it's usually the failures are what make us learn, right? Like you touch a stove, you're like, dang it, that hurt, but I'm never going to do it again. That's not a favorite one. Maybe it's, I don't know. What do you think?
Shoot, my favorite failure is probably in September when the rates kind of went up, and it's like, we were riding this rate train downwards for like 4 months over the summer, and the rates climbed back up, and I just got hit with like 8th quarter, things like that in rates, and it's like you almost forgot like when you should lock a rate, setting expectations. Our rates fluctuate.
Yeah.
Our rates fluctuate with the market. Non-QM, our rates still fluctuate.
Yeah.
We're still tied to the market in some fashion,
Yeah.
We're not tied, maybe on a day-to-day, hour-to-hour like, conventional lenders are, but we're still tied to it. So I learned a tough lesson of setting expectations, ensuring that my brokers and my relationships knew that our rates, this is today's rate. It could change next week. And I learned a lot of tough things, notes that month with the market and the rate fluctuations, and you kind of learn from that and grow and able to have that tough conversation quicker, and it turned into a big learning moment for me, and not only for me but everybody around me.
That's a good one.
Yeah.
What about you, Austin?
Getting fired from Chase. I want to be here.
Yeah.
I would have been comfortable, and my thoughts on why or how are irrelevant, because at the end of the day, I was 3 interviews in with you guys already. And if I didn't get let go the day before my last interview with you guys, I never would have taken this job.
Right.
So my biggest failure is unknowingly doing things that led to me getting let go from a job I thought I probably would have stayed in for 30 years.
Wow.
I was comfortable. I'd turned down 24 job interviews or job offers. I mean, I'd been interviewing for years, and every time I'm like, yeah, I'm comfortable. I know it. I'm going to get my 1% merit increase. I'll have a bonus every other year. I can make this work. And I was just, I never would have left.
Yeah. And you took a risk when you came over here, and it's something new. And, I think that's a good lesson, is like, sometimes you have to take risks and try things. So if you haven't tried non-QM,
do it.
Alone. Yes.
Just do it.
Good stuff.
Yeah.
All right. So please like, share, subscribe. Try us out if you haven't tried us out. I hope you learned a few things. If you have, please share. Tell people about this podcast. I'm trying to grow it. Also, you can follow my Instagram. You can follow these guys' Instagram. Mine's Jon Maddux _. And we have a lot of cool stuff that's on the social media channel. So would love to have you guys check that out. And if you have any suggestions for guests or topics, please let us know, because we'd love to continue giving you guys great content. See you on the next.
Thanks for having us, John.
Thanks, guys. Thank you for listening to our podcast. If you guys are looking for more content like this, we have a FundLoans YouTube channel where we give away more tips, secrets, and origination ideas. You can also email us at info@fundloans.com. And if you've made it this far, I think it's safe to say you like our content. So please subscribe, share, and send us your scenarios. Let's fund loans together.